Hey everyone, welcome to episode 312 of the Your Money Your Life podcast. Make sure wherever you're listening, you like, subscribe, 5-star rate, and review this pod. We're gonna get into it this week. We have the business updates to go over, we have the market update to go over, so plenty of good things for us to talk about. First and foremost, we will look at our chart and get a gauge on the market, if you will. So let's get a gauge on the market and what's going on. There was a little bit more volatility in the past 5 days, sparked by geopolitical Greenland, the U.S. trying to buy Greenland, the U.S. Increasing tariffs if we didn't get an opportunity to negotiate for Greenland. So that brought investors a little bit of uncertainty, and that's why we saw a decent sized dip on the 20th, which has recovered a good amount here if you look at from yesterday as well as a bit of today so far in the trading day. So let's actually jump into what's going on. Um, so we're at the CMC article, which is talking about how global markets were cheered after Trump retreated from threats to put further tariffs on several European countries. So the Donald Trump's taco bell has rung once again. So they're doing a little riff on it. So the taco trade is Trump always chickens out. That's what they're calling, the Wall Street's calling the taco trade. Um, so if you look at it, this was a retreat. So the president retreated on a trade war that was about to kick off earlier this week. Investors are reviving the market based on the taco trade. So if you think about it, he did threaten to impose 10% tariffs on 8 European countries that he that opposed his push to buy the Arctic island Greenland, and then he said those tariffs would have risen to 25% starting in June if again they didn't come to a deal or if they stop opposing the ability for the U.S. to purchase Greenland. Europe, they vowed to be unflinching in their response to the new tariffs, and they said that they would, stand their course. So on Tuesday, again, we saw a sell-off from that. I was pretty confident that again, the taco trade is something that people are playing, especially on Wall Street. You're pretty confident that, one, it seems like the administration takes a strong position and then will back out that position to come to some sort of potential middle ground. And so you don't want to overreact to these trades. Let's talk more about the taco trade. The phrase refers to the president's history of threatening to leverage intense levies only to ease, delay, or cancel them. It was coined last year after Liberation Day, an announcement of tariffs in April that shocked markets, but investors grew skeptical of the follow through when he eventually backed down. Market reactions to subsequent U.S. trade policy announcements were more muted or saw recoveries more quickly. And so that's kind of a basis you can get from a lot of these geopolitical headlines is, they'll be shocking at first and maybe investors will flee to safety for a bit, but they'll come back out. They'll come back out when they realize that it's probably not what the headline says and it's probably not going to be any follow through for that. So that's what's happening. Again, if you look at the chart, we're still a little bit positive year to date. And again, more to be seen if there's going to be more threats, more jockeying for negotiation position. But that's what we have right now. So year to date, again, still quarter of a percent up over the past year, still heavily up. And so we'll see, keep an eye on it. There'll probably potentially be more volatility in this negotiation, in this discussion of what's going to happen when it comes to Greenland. And that's kind of one of the bigger themes here of the market. And again, this morning, the market is up so far, and we'll see. I mean, equities have rallied back from that trade. Anything else in news I'm looking at to see? So there was interesting. The U.S. economy did grow at a 4.4% pace in quarter three, which is better than expected. So the gross domestic product, as we know, it was at an annualized pace of 4.4% for July through September. This uptick reflected revisions in consumer spending. So consumers are spending, and they're starting to call it a K-shaped economy, meaning wealthy are spending a lot more, whereas people that are potentially struggling in this economy are spending less. But the wealthy are driving the most of the consumption. So this uptick in the GDP revision it really reflects just consumer spending reports, exports, and government investment. So imports decreased amid the ongoing global tariff skirmish between the U.S. and its trading partners. So consumer spending, which accounts for more than two-thirds of all U.S. economic activity, rose 3.5% for the quarter. Final sales to domestic purchasers, a proxy for demand across the 31 trillion economy, accelerated at 6.3%. So yeah, that's strong growth in the U.S. You can't deny that strong growth in that particular time frame. But let's look at the jobless claims here. Initial jobless claims last week were a continuing layoff trend that is putting a floor under the labor market. First time filings for unemployment benefits total a seasonally adjusted 200,000 for the week ended January 17th, up 1,000 from the prior week and below the Dow Jones estimate of 208,000, according to the Labor Department on Thursday. So um, those are the numbers. And I do think I have more a deep dive into this. They were roughly flat. So weekly jobless claims signaled limited layoffs. Applications for unemployment were roughly flat compared to a week prior. We just got into those numbers. And so, yeah, I mean, listen, the job market is a big, big thing. It's the data keeps jumping up and down. You can never really tell which way it's going. But it seems to be that we are in a low hire, low fire trend. So where is the economy headed? There's no stark direction on where the economy is headed. That's the theme I get. You have growth, you have inflation that's somewhat taming. You have a job market that seems to be tightening, but unemployment's still under 5%. It's just like, where are we headed? Maybe we're just in a place of just business as usual. Layoffs aren't really that consistent because, again, we have a growing activity in the economy. Consumers on the high end still spending. Um, they are softening the job market, but it's stable, steady pace of growth, a resilient market. So, I mean, it's just like, what is going on? I don't think we have a essentially as bad as things may be projected. That's interesting. I'm going to keep an eye on it. Lululemon, there was some noise about Lululemon. I think they're getting rid of a CEO, and the founder and former CEO is complaining about the brand's board of directors. He said he's engaged in an ongoing proxy fight with Lululemon as it searched for its replacement CEO. Um, so he's, interesting enough, he's pretty much upset with the board of directors because the board, obviously, the CEO is appointed by the board of directors, and they're able to appoint a new CEO if that's what the vote comes to. And he's complaining that they're not taking the company in the right direction. The stock has been hammered recently, and they have a lot of competition, Skims, all these other brands, athleisure brands that are taking over a market that was heavily, Lululemon was doing well at some point. So this is an interesting, fight. We'll see what happens with this brand, which is a huge brand, by the way. Speaking of brands, Meta, which has another brand underneath them, Threads, they're going to add ads to Threads. Ads are coming to Meta Threads starting next week. The rollout will happen over a matter of months, according to Meta. This is an ex rivals. I don't know how many of you use Threads. I find it somewhat interesting, but I'm not too into it yet. My algorithm on there isn't that great. But they're going to start to add ads into their algorithm, into their platform on Threads. And I'm curious how many people use Threads out there. If you use it, what do you think of it? Is it something that you enjoy? Um, I check it out every once in a while, and it's not too bad, but still to be seen if that's something that's going to really catch fire um, at all. So that's kind of the basics of updates. We haven't done a personal finance question in a while, so let's do one here. And the first one being, beyond entertainment, what do Gen Z consumers value the most in the influencers they follow? So we're talking about Gen Z, so a bit younger, and we're talking about influencers. And so what do they value the most? I'm thinking authenticity. I would probably say, oh, wow, look at that. Authenticity is the number two thing. Relatable, authenticity. So first, it's 83% of entertaining content, 51% is authenticity, 40% expertise, and the other tied for 40% is product reviews, recommendations. That's quite interesting, right? Yeah, it's really going to be a sticking point of who's authentic in this world. Now, you can make fake AI people and create Instagrams and TikToks and brands doing videos with people that are just, created video people. So how do you combat that when there's a world of influencers that will potentially be, some of them be, non-human. You really have to get to an authentic core of yourself, an authentic core of your audience. And I think that's what Gen Z is understanding. And so yeah, that's quite interesting. Quite interesting. The next question, because we have not done a rapid fire question of the week for a bit. What is the average cost of a 3-day hospital stay for someone without health insurance? What is the average cost of a 3-day hospital stay for someone 3 days? Okay, what is it, like 1,000 a day, maybe $3,000? Oh, I'm way off. Okay, so these hospitals could be a real health scare. The answer is 30,000. So what is the average cost of a 3-day hospital stay for someone without 30,000? That's crazy. So damn, 10,000 a day. I'm way off. That's 10x my numbers there. Wow. So yeah, always keep insurance when needed. I think most people would have it, obviously. So you'd want to stay insured. That's for sure. What's also for sure is that we do this every week. So make sure you like, subscribe, 5-star rate and review, and share this with your family and friends. Also follow us on all the social media platforms, Delano Support over TikTok, Instagram, Twitter, X, Threads. You'll see us there. We'll talk to you next week.